All right, welcome to The Explainer. Today, we're doing something a little different. We're going to put a stock on the operating table. Seriously, we're performing a full technical diagnosis on a penny stock that's in total crisis mode, using its charts like medical instruments to figure out what on earth went wrong and, if there's any pulse left.
And this number, this is what started it all. A nearly 25% drop in a single day. Wow. Look, this isn't just a bad day at the office. This is a catastrophic event for a stock. It's a hemorrhage.
So the stock we're talking about is Aspire Biopharma Holdings, ticker symbol ASBP. And its story lately? It's a total textbook case of a technical meltdown. I mean, this is the kind of chart that gives investors nightmares.
And that really is the big question, isn't it? When a stock gets hammered this badly, do you run for the hills? Or is this one of those hidden gems, a coiled spring just waiting to bounce back? Well, to find out, we're going to treat this like a medical emergency and run a full set of diagnostic tests.
Okay, first things first, let's meet our patient. This is ASBP, a highly speculative penny stock, and, well, it's just been rushed into the ER after a massive collapse. The situation? It's critical.
Let's just quickly look at the patient's chart history here. It's pretty grim. Just a few months back, mid-August, ASBP was trading at 39 cents. Then, it just entered this downward spiral. You can see these huge spikes in trading volume, like that one on October 2nd. That's usually a big sign of panic selling. And today, it's sitting at under 12 cents. Just a devastating decline.
With any patient, the very first thing you do is check their vital signs. For a stock, that means looking at its price compared to its recent history. These are the absolute fundamentals of its health.
And the results are not good. The stock's current price is way below every single key moving average. I mean, from the super short-term 5-day all the way out to the long-term 150-day. You can think of these averages as the healthy baseline for a stock's price. Our patient is way below that line. Every single vital sign here is flashing bright red. It's a bad scene.
Okay, next up, we're going to use a tool called Bollinger Bands. The easiest way to think about these is like guardrails on a highway. A stock's price usually just bounces around between these upper and lower bands. It's actually pretty rare for it to completely crash through one of those guardrails.
But ASBP? It didn't just crash through the guardrail, it went flying off a cliff. The lower band, which is supposed to be the absolute floor of its normal trading range, is at 17 cents, and the stock is trading under 12 cents. This is a wild, statistically extreme event. It's a huge signal of what we call a deeply oversold condition.
So, the initial vitals? They look awful. Now we need to run some deeper scans to really understand the energy, or the momentum, behind this crash. Is the patient totally exhausted, or is there still some serious force pushing it down?
And that's really the key question we're trying to answer now. To do that, we use these tools called oscillators. They basically measure the speed and change of price movements, and they help us see if a trend, whether it's up or down, is getting kind of overextended and, well, tired.
Our first reading comes from a big one, the Relative Strength Index, or RSI, and the number is 26.21. Now, on its own, that number doesn't really mean much, but in context, it's incredibly important.
See, here's the deal. Anything below 30 on the RSI scale is a major signal that the selling has been way too fast, way too furious, and that the stock is now oversold. This right here is the first potential glimmer of hope in our entire diagnosis. It hints that maybe, just maybe, the downward pressure is running out of gas. And it's not just one test saying this. We're getting a really clear consensus from all the other machines. Other key momentum indicators like the stochastic and stoch RSI. They're at extremely low levels. I mean, one is literally at rock bottom, 0. All these deeper scans are confirming the exact same thing. This patient has been pushed to an absolute extreme.
Okay, one last piece of the puzzle here, volume. This tells us how many people were actually involved in the panic, and the relative volume for the day was a massive 9.14.
So what does that mean? It means trading activity was more than 9 times higher than a normal day. This price drop was no accident. It wasn't a fluke on low trading. This was a mass exodus, a stampede. That high volume shows there was some powerful, serious conviction behind all that selling. All right, we've run the tests, we've checked the vitals, we've done the deep scans. It is time to put this all together and give our official diagnosis.
Okay, the diagnosis is an acute downtrend, no question about it. Every single primary indicator is pointing to a stock in absolute freefall. The price, the trend, the momentum, it's all profoundly negative, and it's all confirmed by that huge stampede of selling volume. But there is one major complication: those extreme oversold readings. It's kind of like a patient with a raging fever who is also, somehow, showing signs of being ready to bounce back. It's a paradox.
So what's the prognosis here? What does all this actually mean for the future of ASBP? This is where the real art of analysis comes in.
And this brings us right to the heart of the conflict in this stock story. On the one hand, you've got a solid case for a rebound. All those deeply oversold indicators are screaming that a short-term bounce, what traders call a dead cat bounce, is definitely possible. But on the other hand, you have the extreme risk case. The downward momentum is just so overwhelming, and that massive volume confirms it. It suggests that trying to catch this falling knife is incredibly dangerous.
The final analysis from our source material really sums it up perfectly. Yeah, those oversold conditions are tempting, the whispering about a potential bounce. But the sheer force of the negative momentum makes this an exceptionally high-risk gamble. So the advice is pretty clear. Stay away, avoid jumping in unless you get some real confirmation that the trend is actually turning around.
And really, that's what it all boils down to, right? Our patient is in critical condition. The charts are screaming danger at the top of their lungs. Yet, there's that one faint flicker on the monitor from the oversold indicators. So the real question for any investor is, do you bet on that one little flicker, or do you trust the overwhelming and frankly terrifying diagnosis? Thanks for joining us.